learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at June 12th, 2020, and the stock market is going to go crazy. Let that settle in for a second, because this title actually has a lot of meaning, and it's true, and deep down you know it's kind of true. And even if it's not, the point is investors have this in the back of their heads. Today was an 1,800 point down day, the largest since April 1st, but given the context, February and March, that was all the coronavirus fiasco and the worst stock market collapse we've ever seen, or the fastest. So this is very, 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 very interesting, because we have a lot of people asking, is this the drop now? Is this where everything kind of reality starts to settle in? We will see. So we have a lot to talk about. There's a few explanations. I'm going to even go over what people are saying, even the interpretations from yesterday. Check out the watch list we made yesterday so you could kind of link together how these events and what kind of caused this, because we discussed this. So that's really key to understanding what happened today. However, today was very, very big, even historical. We saw something we never seen before, and we're going to talk about that, but have a few plays. We were able to make some plays. We got clapped on a few of them, or some of the calls we were holding, but cash balances saved us. And welcome to volatility. I encourage all of you, if it does come back, even if it doesn't, stay calm and relax, and cash balances protect you. Always have buying power. But we got a lot of plays to go over. We have to talk about the breakdown and what we are expecting and what we're looking for moving forward. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life, chat, anything. All we ask is that you're positive and respectful, and the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post that below. Source that info, baby. And finally, tomorrow is Bring a Friend to Colt Day. I am going to be making some plays. A lot of the plays we have, I'm going to explain the strategy. Tomorrow is going to be wild, or at least even if it isn't, it most likely will be, but there's going to be some excitement. So Bring a Friend to Colt Day, but I have a surprise for you, and I think I'm going to do a really big play. Well, I know I am, because I flipped the coin and it told me to do it. I have a great idea. It has to do with everything we're seeing, so I hope I see you there in the morning. Right off the bat, though, Wall Street did react. This was what we said yesterday. This was the whole point, because Jerome Powell had the speech. This is the Fed, and I kept saying this a lot today. Go back in time, go back in history, especially if you've been watching along. You know, you've seen this. We cover it every single day, and you know that we talk about the Fed being an event, but this commonly happens, especially as of lately, and especially when it's kind of a pivotal moment or volatility does start to return or peek its head. So I'm interpreting today as Wall Street reacting, and I'm still standing behind my thesis that this is Wall Street pretty much responding to the Fed, and it's more or less Wall Street not liking it and throwing a tantrum over what Jerome Powell said, or again, the lack thereof, like we talked about. But there was also negative news about this second wave. So Texas now, they had a lot of cases reemerge, and a lot of people were talking in the morning. Again, we gapped down 900 points on the futures. A lot of people were talking about Texas in the second wave, and although it can be important, people have talked about not closing down the economy. I think it is going to have an effect if it does get bad. And, you know, we have our surveys this time. And again, people are scared now, but that contributed to a big portion of today. And again, I will tell you, I was surprised. I was expecting us maybe like 1,200 points, but 1,900 points is pretty big. And just how it progressed throughout the day was very, very weird. So I think it got that little boost from the second wave, but for the most part, in the morning, it did look like a typical day after the Fed. Again, Jerome Powell said stuff, but he didn't say stuff. The market had 24 hours to react, and then as it came through, the market was not down with it. So there was that in a few interpretations we will talk about. But again, like I'm saying, with how weird today was, today's sell-off was one of the biggest downticks in history. So pretty much this means that you saw the most amount of stocks all declining at the same time compared to the stocks advancing. So pretty much every single stock was going down today. And at one point, they were all going down at the exact same time. And you had a very, very few amount of stocks go up. That's just literally like picture a pool or an ocean and then all of the water collectively dropping. So that makes sense why you did see such a big Dow drop, 1,800 points. That means everything, all the rotations we were talking about, everybody got clapped. So that is something I'm keeping in mind, and we'll see, because again, now we have actual liquidity returning to the market, and this is what I'm considering moving forward. I'll tell you guys how I'm even going to be moving forward with all these plays. It's going to be setting up a budget, but don't let me not get ahead of myself. But keep an eye on this and the amount of sectors and how it's moving. But that is something we saw today. Again, today was a very, very important day. But as far as those interpretations, some people were saying Powell was too transparent. So some people are saying the market dropped because Jerome Powell was too transparent. Remember, I think he didn't say enough, and I thought he was pretty much signaling or giving off the vibe that he didn't want to do something, but he was getting pressured. And some people said he was just so transparent. He was just saying it's too fluid. We don't know what's going to happen. It's in the hands of this and that. So they really interpreted Powell as just being too transparent that the situation's bad, and he was very hawkish, meaning very negative, and he didn't really offer any positive support or something for that the bulls could be like, okay, it's good, it's Powell, very good, not too bad, 50-50. The market just took him being that transparent as not good. That is one interpretation. Here's another interpretation from the president. Trump tweeted that he didn't think that what Powell did was enough, and he came at the Fed, and it's very weird. We haven't seen this in a while. Again, last time was around August 2018, and then October, and then all of those fiascos. So it's interesting when he comes at Powell, but he tweeted, and I didn't really, there was just a big disconnect for me because it didn't make sense, because like I was saying yesterday, I don't think Powell said enough. I don't think he gave any clarity, and I said the market may not like that. He was too broad, but maybe that's what Trump was saying, that he didn't do enough in that sense. But again, today has no real explanation, so keep that in mind. But through my past history and everything, we've seen this a lot if we look back in the past. So I'm giving it to the Wall Street reacting to the Fed. We have these interpretations, but you're seeing things kind of boiling up and getting ready. So as far as tomorrow is going to be crazy. I mean, the key is watch. We have to see what happens tomorrow, and that will confirm if this is a Fed move or if there's something bigger, or if this is going to have volatility really returning. And it's going to be a Friday. We're going to watch for the down Friday, down Monday. Again, who wants to hold into the weekend? We will see that really Friday is a really good test, and especially the Monday after. So down Friday, down Monday. If you see a sell-off on Friday and then the following Monday, investors are still worried, and then you see a down Friday and a down Monday, that surprisingly doesn't happen too often statistically, and that could signal, okay, we want our liquidity. Again, liquidity crunch might return. So again, they kind of fixed it with the stimulus, but if that liquidity crunch comes faster than expected, that could be an issue. So we need to see how this is going to develop, but what I'm looking for is either a big sell-off tomorrow. Again, another all across the board above 1,500 points is what I consider a big day as far as in the recent context of what we've seen. Even from March, even though I didn't know, 3,000 points, that was crazy. But if anything, I'm expecting that, or just kind of oh, wait, I meant that for bad sell-off. Bad sell-off is 1,500, and then a big sell-off would just be something big, but then it kind of bounces and holds up where it's like we still close red, and it could be sizable, but it's not like what the hell happened 2 days in a row type of stuff. So I also don't think green isn't off the table for tomorrow, but we'll see if the bulls come with that same energy from last week, or again, like I'm saying, the fact, even this title, I know all jokes aside, but really right off the bat, this is just putting the money where the mouth is. That for everybody, bulls and bears, like you really believed in it, you kept posting the articles, whatever it may be, you really think the economy is that good, put your money where your mouth is, and vice versa for the bears. And that's what we're going to see, but it's making people think, and I'm more looking at the psychology of the market right now. This is a very interesting inflection point if it goes beyond one day. But again, we have seen a very, very big rally recently, so we cannot be too quick to decide. That's why I have a lot more things to show you and stuff, but I'm going to find out after tomorrow. I need a little bit more data. I still want to set up, and now we will talk about the plays, but I will tell you the strategy beforehand. It is going to be, it's like, hey, volatility is going to come back here. What I'm planning to do is allocate me a set of cash to last me for this next month or two. So I don't want to spend all the cash. I'm watching my cash balance. Maybe I'll give myself 10 grand, 5 grand, 3 grand, whatever. I'm going to set that amount aside, say this is what I could play with. I'm going to say I could only buy a minimum December, November contract so that at the very least too, I could get some of this volatility if it does return and surprises us. But then also it will protect me for kind of towards the end of the year, if anything. And that's what I'm going to go about doing if we do in fact get a confirmation that this is going to be a little bit more than a Fed reaction, or if it is really just an awful reaction from Wall Street and they really did not like what Powell said even more than what we saw today. So that is pretty much it. I hope you guys are ready. The best advice I've given. None of this is financial advice. I'm just trying to show the risk again. There's almost financial advice. Education purpose only thing around today. But best advice when I talk to myself in the mirror, say, don't, hey man, no pressure. Relax. Even when it's crazy, I put a mirror monitor. I replaced one of my monitors with a mirror, and I look at it and I just tell myself throughout the day when I see the volatility, I'm like, just chill. It's all good. You'll see the opportunity will come. I'm not going to panic. It's really not that scary. There's nothing to worry about. There's time, and relax and take the pressure off, and you will see. You will get ready to strike. Go for the easy ones. So that's what I tell myself on that mirror. But enough about that. Let us get into the plays. So right off the bat, you see them here on the screen, HD and Apple. Those were two plays we made. They were killer. And now I'm going to show you guys something. I've been hooking you guys up lately. I hope you've been realizing we've been doing this small account at the same time, but I've really been hooking myself up. I like this because what I've been doing is now I could do small account plays and manage this small account, but I could do so in a way where it's kind of a lot more safer, but then I'm still getting the upside with some of these plays that I want to play. So I made the Apple play and we made the HD, but HD today was a killer. We made 560% on it. We bought these at 35 cents in the morning, and they're going for $2.22 each. So I got two of those, but unfortunately, I ghetto spreaded them. So that's the downside with doing this strategy, but it's a small account. Remember, I only had $99 in this account, or $160 yesterday. So I could have just held the HDs and they would have carried me, but we still did, pretty good. So what I've been doing is buying more of the plays, and then I'm only getting one on my small account. And then the minute I'm able to profit at a good ghetto spread opportunity and just get my money back and still have upside, I'm just ghetto spreading it. So that's what I did here. This is the ghetto spread. Check out the tutorials. We have it on the channel. We bought this 225 in the morning, June 19th, and we got those at 35 cents. And then what happened throughout the day, they started to shoot up, or really shortly after. Again, the market did pick up pretty fast. So what I did, I sold these back at 35 cents, the same price I paid. So this trade was literally free. I didn't spend money. I didn't make money, but now I own the right to the 225 put. So if HD drops below 225, I get to profit off two contracts, and then if it goes any lower than that and goes below 220, then this guy gets it, and then that's it. But I get to profit off $5 between there. It's $1,000 max gain. So if there is volatility in the next 2 weeks and it goes crazy, small account, cost me nothing. I can make $1,000. So that's what we did there, and then I was going to do it on Apple, and then here's a good example. Again, it's not always going to work like this. We did the same play on Apple, and I'll go over and I'll show you the bigger plays that we did. But Apple, I did the same thing, but I bought 4 on the big account, and then I bought one on here. I bought 2 on here. So I spent a little bit more, but this one had a little bit more time, and then Apple was very hard. You could see we bought it at 40. It took a long time for it to go up, so I had to wait. Even it wasn't like a day trade. Even though I planned to ghetto spread it, I had to wait until it went up, and then finally it started going up, and I waited a good amount of time. Thankfully, Robinhood was lagging. It actually helped me out. I wasn't looking at the contract. Oh, wait, I thought I ghetto spreaded it. I just sold this one out because I ghetto spreaded the Adobe. So we played Adobe for earnings, but I sold out of one of these. I think I got $89 for one of them, bought it at 40, and then I'm still holding this other one. And then this one is not ghetto spreaded, it's uncapped. So I was thinking about doing that because I was like, all right, well, I could keep the cash balance high. And then again, you saw yesterday I had 140 cash, now it's at 150. So there's that. But those are all the plays we made. We made the Adobe, ghetto spreaded it before earnings. I'm going to watch them. These are shorter dated contracts. And what I just realized, just like last time, even if volatility is what I'm going to expect, any of these 619s are going to be duds because that's going to happen next week. And then usually right after the next week, then we're going to see the volatility pick up again. So those were all the plays that we did today. Again, here they are. We got those Adobes. I got them all 58 cents. I flipped those. That one is an earnings play. We're probably going to lose on that. Adobe ended up going up. They had earnings. Again, they reported earlier. They did good. I got clapped on them 2 times in a row. 0 for 2 on them, but I'm going to watch them for a continuation. And I also grabbed an Amazon play. This one, I kind of YOLO'd it. I got a next week Amazon 2260 at 594. It did end up closing up. It has a really wide spread, so I'm going to be holding that. Again, I got a little FOMO. I saw a crazy big candle on them, but the key was HD. And why? Because these are the plays I'm going to be looking at. We got these right in the morning, 9 minutes in there, but a lot of people, it went up, 400% or 500%. But the point was, it was down, then it shot up. But even at this point, right before it started to kind of edge down, and then it did go up, the market was already down 2 or 3%. HD was break even. So remember, it's been rotating, and then this is the key concept for any of these puts. At one point, look at the last month, maybe even last few months, all it did was go up. So why did we make so much? Because we got the shorter dated contract that decayed. Even though it dropped, it was outpacing the market, but it hasn't had a really big down day in a month or 2 months. So we got the first day grabbing it that morning. We did very, very good. I still paid a premium on it, but this is what I'm going to be looking for is the companies that are higher up, have meat on the bones, and then the slow mover type value stocks. Those are where we've seen really, really good plays. Even those McDonald's credit spreads came back to life. So those are the ones I'm going to be watching. I'm going to be monitoring all these plays. We have all these different plays that we're in. I will be watching Boeing tomorrow and on a Friday. And again, it gave up all that. We're out of those plays, so we're going to see. But I have a big play I'm looking at tomorrow. It's related to the global macro, but I need to see what happens with the SPY tomorrow, the market, how it's interpreted and all that. Otherwise, I'm going to be playing HD. I will look for that McDonald's play. I talked about it all week. I didn't grab it, but I'm going to ride out that Apple. I am tempted to sell that one or ghetto spread it on the big account, but I am still holding those. So I still have 2 of those HDs. So even though on the small account we have those ghetto spreaded, I'm still holding 2 of those. I probably should take profit on them soon, but I feel like I took profit with the ghetto spread one, but I'm probably going to just see how tomorrow plays out, and I might look to sell one of those tomorrow, get the initial investment back. The initial investment on that one was really, really small, so I kind of like writing it out, and with the volatility, and because I don't really have that much exposure here. And then same thing with the Apple. I have a little bit more Apples that I'm holding on the bigger account, this one, so I'm probably going to flip those out. But besides them, watch that NVIDIA play and watch the chip makers. I'm going to be watching AMD, Micron, and Intel. I kind of have my eye on them. I'm not too sold on them yet, but McDonald's I'm really going to be liking, but I need to see the rotations tomorrow. But really what I'm going to try to replicate is look at that HD chart. If it looks like that, you're going to pretty much want it. Not like what it ended up today, but take a look at the daily. These are what I'm going to be looking for, the slow movers, and then also focusing on the winners and losers from last time. But we really need to see everything from the breadth. Is it all the water getting pulled out of the sink or not? And then finally, here's TLT. They are popping back up. The bond market's saying something. So again, this is what I'm also waiting for tomorrow. This will let us know. If we do start to see this get a crazy multi-dollar day tomorrow, that will be it. Or does TLT start liquidating like it does eventually at one point? That will be the key, and the bonds will tell us. But it's going to be exciting tomorrow. I hope you're there because we are going to stay very, very nimble. I'm going to go back. There's going to be a lot of stuff. I'm open to a lot of stuff here. I want to see what happens, but I'm also going to be very, very protective. So I hope you guys are ready, and I hope we see you there. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. If there's a time to have it, it is now. Are you going to get called off sides? Is it going to be a false start? Are you going to rush in? Or are you going to camp like a sniper? You're going to wait for it? You're going to control the balance? Are you going to give them a chance to take 40% of your account, 20%, any amount? It is up to you. Be smart. Seek wisdom. Is it smart? Go slow. Remember, you saw with HD. I forgot. I made a Facebook play today too. I forgot to cover that, but I'll go over that. But still, all of the plays, you could do anything. You could make plays. Every single play we made today worked out, even though we were late. Don't worry. Don't get pressure. Control. No pressure. Relax, baby. But the code loves you. I love you. And we'll see you in the morning. Let's go.